All right, ladies and gentlemen, I hope you had a wonderful day. Today was crazy. The day before that was wild. But now tomorrow is Big Money Friday, baby. You got the non-farm payrolls, and how this is going to play out is going to be very interesting. If you've been following along, you should know we cover all of this, and we have a little bit of a breakdown. But please do not forget, we will be live in the morning, and I'm telling you, that will be the best analysis you could get in real time. And if you're able to do it early and being able to position early, it could have a lot of positive effects. So youtube.com/the stock market. I'm probably going to go live 15 minutes before the data release, and the data comes out 8:30 a.m. Eastern, which is 1 hour before the bell. So hopefully we see you there. But now, these are the numbers that are expected. This is the survey response. We are expecting an add of 200,000 jobs tomorrow, and this is actually pretty low, and the last report was 261. But why I'm showing this to you now, we saw this happen last time. There is going to be multiple factors to be watching, both the non-farms, the private payrolls, the manufacturing, but now the unemployment rate, how much they're getting paid, the underemployment rate, the labor force participation. Depending on how the release comes out tomorrow, people are going to respond to this. So I hope I see you there. It's going to be exciting. I got I got a little bit of a breakdown for you, and I'm going to share with you kind of what I'm feeling. But before we do any of that, we got to talk about this craziness, and I hope you can apply this to tomorrow, because simply we had a gigantic move yesterday, and what happened today, even with all of the data, even though some of it was good, the reaction wasn't too wild, and I'm calling this the hangover. You've probably seen it. So tomorrow is definitely going to be interesting, but this chart right here, what people are focusing on is that we closed above the 200-day moving average. I guess in technical land, what they say is usually nothing good happens underneath the 200-day moving average, but now what this chart is showing you is the performance after we have spent 7 months below the S&P 200-day moving average, and it's only happened a couple of times, or a handful, as you could see. We actually had it happen in January, and this is showing you the 1 month, 3 month, 6 month, and 12-month performance. So now we're about to find out. But on average, the next month is a gain of 1.6. The next 3 months is a gain of 6.7. The next 12 months is 12.2. Or 6 months is 12.2, and then 12 months is 18. You can check the median and all of that. But don't get too excited. It's not done. And you'll notice 2002 that happened, 2003, 2009. Yeah, every single time they already cut rates. So this is where we're at right now. And the only other times was the 70s and 80s. But it's going to be crazy. Again, we got to follow the data, and this is setting up the final runway for the month. But just don't get fooled for the rest of the year, baby. It's going to be wild. So hopefully you guys are ready. I got a breakdown. We did a bunch of plays. We killed it on the bonds today. Hopefully you've been watching the watch list to know why. But it's going to be wild tomorrow. I will see you in the morning. I hope you're ready, and drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/the stock market. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, just like the last non-farm payrolls, tomorrow has to be a big shocker to get a big move. We have moved a lot today, and even today, I thought the data was good, but we didn't move much, but we held an incredible rally. So keep that in mind. But one thing, and a lot of chats brought this up today, they said, is 200,000 jobs expected? Is that big? It's not. That's a very low number. And after the ADP and a couple of other things we've seen over the last week or so, a lot of the expectations are lower, and there's one economist who, he always sandbags it very low, and that kind of messes up the averages a little bit. So keep this all in mind. And again, I hope you've been paying attention. That's why you got to be subscribed, man. That's why we got these videos. Hopefully you understand good news is bad news tomorrow, and bad news is good news. And I'll tell you, depending on what happens with the bonds and yield curves as we get across to 2023, maybe this dynamic will change, but throughout this whole year, that has been the phenomena. So it's quite simple. If there is a low number of jobs added, so even if it comes in line, that's a low number, that will be bullish. The least amount of jobs added is the best reaction for the market. If tomorrow now that number comes in higher than 200,000, the higher the number, the worse the reaction. But like we said, the number is already low, so even if it comes in line, that is where things are going to start getting confusing. So now let's jump to the real thing that matters here. I'll get you to the chart that I showed you in the beginning first, or after this. But my take here is only thing that's going to matter is the unemployment rate. Now, assuming the headline print is difficult to read, aka it comes in line, or let's say it comes in at 180 instead of, the lower than 200, I think people will like that in general just by nature since the expectation is already low. So if it came in lower, that would be even better. That would be bullish, but I'm kind of expecting it to come in line or not too much above, not too much below, and everybody is going to focus on the unemployment rate. Why am I saying this? Because this is what slipped in there last time. Everybody was looking at the print. I'm pretty sure I told you the day before on the watch list the same thing. Watch that unemployment rate. And even though the number was difficult to read, there was a little bit of confusion, and then it skyrocketed as people responded to the unemployment rate being lower. So that is what we are going to be looking for. But now I'm not expecting anything to be easy, and you got to respect the market. But pay attention to all the things coming out. What could easily happen is that if people aren't giving it the reaction and these come in good, or the number comes in low, or unemployment rate kind of stays the same, people are going to look at the participation rate. But a lot of things you've been hearing them talk about in the Fed is the wage price spiral. So the amount of prices paid or how much people are making on earnings, that would probably be the next most important thing in my mind. And then if we really need to pick it apart, then we're going to go to the labor force participation. So it's one thing how to read the data, but then two, given we've already had a big reaction, you're even getting the bonds playing along this time, we really want to see how everybody collectively starts to interpret it. So don't jump too soon. If it's really obvious and easy, we're going to tell you on stream and you'll be able to know. Otherwise, just approach with caution and see what it provides, but know the key factors: the amount, the unemployment rate, the average hourly earnings, and then if all else fails, just start picking apart the unemployment rate and then the labor force participation. But we will see what happens. But now, coming into your final key here, the simple thing, and this is what we brought up yesterday, and this is related to that chart I showed you. 490 breaks the downtrend, and guess what? We closed above that on the SPX. Or no, excuse me, we went above there, but we closed above the 200-day moving average. 490 is going to be the next level, and now 4,155. That is the midpoint on the S&P between the peak and the low of January and October. So imagine January you were at the high, October you were at the low. If you cut that in half, the midpoint of all of that is 4155. So that's going to be another very crucial level. And then finally, believe it or not, I forgot because, we did a lot since then, but August, 4325 on the SPX, that is the high, and we got to get above that, and getting above there, that will get people feeling good. But I don't know if I said this here, the difference with that chart I showed you, this pretty one here, and I'm showing you all the dates, and all that, but like 2002, 2003, 2009, they already cut rates by the time that we haven't cut rates. And we're raising rate, and then when it does cut, then the uninversion, and anyways, but Chattadonia, I hope you're ready for it. Tomorrow is going to be wild, and we are going to be there. And get your head in the game and get ready for the month of December. But let us get into the plays. So right off the bat, I made a couple of plays today. We'll go over all of them. We got to realize some more profits today, and I didn't get trapped. Or I got a couple of plays. You'll see it, but nothing like any of the other times. I've been down a couple of times before the non-farms or events, so I'm going to get to approach it very fresh, and that is the key idea. But now, Boeing and Uber, I have a play on both of these, and this is something I've been saying. I even said the same thing about bonds as well, too. But if the market is really going to rally and if that data is good or everybody's just feeling good seasonally, again, imagine we play a day like today, it doesn't do much and then carries over into next week. One, don't forget about China, but and that's why we got the yen. But at the end of the day now, if everything is going to rally, I want to go for these underperformers or some names that just really haven't moved. Go look at a monthly chart for November, and there's some names that do not look as vertical as the other one. So you got to approach it with caution and understand the reason why. And I even have Boeing up here, but Boeing is only underperforming in the last couple of days with the Dow lagging behind the NASDAQ and all of that. So keep that in mind there. But Uber, go look at the daily chart. You'll see it really hasn't moved. So I made 2 different plays on those. Right now, I'm holding 100 shares of Boeing. I flipped it for just about 60, 70 bucks today. And then I re-added the 100 shares. I'm holding those at 175.68. And then for Uber, I made 2 purchases. I have 200 shares with an average price of 29.03. And remember, I have Uber in the long term. This is just a day trade. Don't make it any deeper than what it needs to be. But that is what I'm going to be looking for tomorrow if it's bullish. And then what I'm also thinking, look at those stocks today. They dropped today. Maybe if tomorrow's bad, they might be able to come up. So we will see. But that is play number 1. Then play number 2. I'm sure you saw it today. It perplexed a lot of people, but we had, we got the front running and we had some runway on it. Even if you're holding 2, I cut out early again. I don't know what you're talking about, but the bonds, man. So even then, I'm okay with selling out early. I was able to realize about $1,500 or $1,600 on my bond future play. And remember, I've been going back and forth on this, and we keep bringing it up. And remember, there is a lot of other bond ETFs if you don't want to play it, but understand the difference. The long end of the curve, that is what really, really rallied today. So even TLT did better than the 10-year because that's more longer duration. But what I'm looking for is a double dip after the data. This is a great point for bonds. It could even be a short squeeze, and a lot of people are saying this shouldn't happen. But even Michael Wilson, is it Michael Wilson? I think it is, of Morgan Stanley. He's really bullish about it, and he's been calling for a lot of bullish events here. But like we said, if anything's going to happen here, the bonds would take off. But don't underestimate, the bonds also kind of double as a safe haven risk if anything even pops off. But what I'm going to do is use the data and try to find another entry point. I think over the next couple of weeks, we're going to be able to play this, and hopefully you've been watching. These could be some big plays. So some of the options actually hit today, and that was cool. Shout out to the chat who dropped their plays and got to show us that, but you could get all across the board. So dollar for dollar, I think is safest, but if they keep moving big, maybe those options will start hitting. But keep your eyes on them and let the data guide this all. That's going to be the temptation of fight, and it's already been crazy. But that is play number 2, looking for the double dip on bonds. And then finally, Disney, baby. They've been an underperformer since their earnings because they did bad. They did go to the low 80s, so they're kind of up, but they're kind of staying pinned there. So they're having a tough time getting in on the action, and this is his word to if there is an underperformer move and the market really goes up, these are the ones I want. So I'm still holding those shares. I want to average down, but it hasn't dropped low enough, but it also hasn't gotten enough to give me my profits. So going to be watching this one. I think Disney will be interesting, and hopefully if tomorrow is good, it should take everything with it that was left behind. Otherwise, well, maybe watch these to be the outperformers tomorrow, but we will see what happens. But those are the main plays as far as everything else now. These are the plays that we made. I started with the Uber in the morning. Then I added 100 shares of the Boeing. About almost right before Euro close. I cut out the bonds. That's the realized profit at 114.05. Yeah, the bonds trade different. But then I sold my Boeing. It was like a $50, $60 profit on there because that was after doing the average down. I did it twice, actually. These were 2 separate orders within an order of each other or an hour of each other, but got a little profit on that. I opened Carvana shares again. I think it was a little bit of the tax loss harvesting more or less, or even short covering, taking profits to go back up to it. Like we said, you may start to see this or hear about it towards the end of the year here, but AMC, GME, all those were going up. Carvana wasn't moving too much. I was like, all right, not too bad. small position, $1,600 total for 200 shares. Still holding it. I was up for a little bit, didn't flip out. I wanted to flip out, but ended up holding it here throughout the day. Then CLF, remember I was down on that, was able to close out for like $40 profit. So another one of those plays that was working against us, closed out for green. Then there was some crude news with stopping like mandatory cuts. I traded 3 micro crude futures, 81.99 to 82.23. Wasn't too bad. It was like $70. Got out of that. Then I averaged down on the Uber from the morning. So the first one was at 29.36. Then the second one was at 28.07. So I did keep it small. And remember, we've been talking about that since then. And Uber, even 200 shares, I mean, it doesn't move too much. So understand the risk to reward and just take a look at that. But there was that one. Then I started flipping the ES. They were decent, but it kind of took a little bit and the volume wasn't there. But I closed out all of these for like 165 net profit. Then I added 100 more shares of Boeing again after we made that flip there. It was at a much lower price than anything. So I said, you know what? Let's ride it out a little bit, and I'm carrying that in tomorrow. And then I did 100 shares short of Meta. There was news about Apple getting into like VR headsets, and like they're getting close to it. So I thought I would move it, and really, I mean, Meta, it's either going to fill that giant gap or it is going to get collapsed. So those were the main plays. As far as everything else, I mean, oh yeah, wait, I need to get you to the actual ones. Everything else, like, where is it? I almost forgot, but hopefully you guys can see this. Don't let me. I'm making sure I don't, get it, because I usually I don't switch. But as far as what I'm holding now, again, no more ES. There's nothing else there. Even those free options have expired. Then there's the Boeing, the 100 shares holding only $8. Carvana down $40 on those 200 shares. The Disney still down 170. Meta down 50. PRVB, we still hold that, and that one's up again, waiting for the data. Down 160 on the Uber. Then there's the Yang, still down 300, and we're still riding those out. And then there's the Qualcomm, still down 2,200, but you guys should know my plan. I said, hey, let it squeeze a little bit, and I want to add more. Otherwise, going to ride that one out. And then I still have that micro short still from earlier. It's still down that same like 1,400. We closed the bonds, and I still have the yen and the pound balancing each other out, and the yen is going crazy still. So pretty clean coming into it. Wound up with these shares, the Disney, the Meta, the Carvana, and the Boeing, and already still holding that out. So, and the Uber. And then we're just going to go from there. I could even reposition by pre-market, get the data, and then I think it's going to be a fun one tomorrow. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you really start living once you're thankful. Being thankful costs nothing. Enjoy this moment. Enjoy the markets. You still got another season ahead of you. You got to get your mind right and take advantage of all of it, man, and just bask in the moment and be thankful. And I'm telling you, you're going to make a lot of improvements in Chad. You already ready for it. I mean, shout out to Adam. Shout out to Co-Real Estate, bro. This is an impressive group of people, and you are very impressive, even if you made it to the end of this video. But be focused, and this game is designed to make you frustrated. Don't let it get to you. Be in the game. Make the most of life in and out of the market, and it's going to be a good one, baby, and let's close it out. 30 more days. I was off on the 30 day. Now it's 30 day. Okay, I'm just trying to get you right. It's game time, baby, but drink that water. I'll see you early in the morning, and peace out. Hearn.